Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bullish scenario where we're still looking for a move to the upside either in a wave 3 or in a wave C. Where for a wave 3 we're looking for a more parabolic high impulsive move to the upside where volume is increasing as well, with a minimum target being the 1.618 at 39.5k. And for a wave C you want to see a more lazy impulsive structure to the upside where the target area is between the 1 and the 1.236 at the moment, which is between 35.5k and 37k. That means that locally we're still looking then for a wave 2 or a wave B. Now the common Fibonacci targets for a wave B are between the 382 and the 886, and for a wave 2 are between the 0.5 and the 0.786, with the 382 being a rare target for a wave 2. You can see that currently price is finding support on the 236, which in both cases is a very rare target. So preferably price founds a little bit more downside and goes to at least the 382. And if we then look at that 382, we do have some additional support over here in the blue target box that you can see around 29k, and also the 0.5 over here, some extra confluence in case price is moving a bit further down around 28k. The fibs are taken from the low over here to the high of wave A or wave 1. If you look at the bearish scenario, then we're looking for more downside. In this scenario, we're then looking for a WXY in a three-wave structure where all the waves inside of a WX and Y are also three-wave structures. And in a wave Y, most commonly, you will find a zigzag, flat, or a triangle. Now, it can't really be a zigzag, which is a 535 that's invalidated because price took the high over here of wave X. A flat is still a potential in an A, B, and then a wave C, but the target area of wave Y is too deep for a wave C to reach if this is an expanding flat following the Elliott Wave rules. You could then look for potentially a B, C expanding flat, another corrective structure, and then continuation to the downside. So then you're looking for a W, X, and then a Y to the downside inside this wave Y. However, it is definitely preferred to have simple corrective structures in a wave Y or a wave W, meaning a zigzag, flat, or triangle. And that is not really something we see because also a triangle over here doesn't really work. If we go to the lower time frames, then this could already be the end of the corrective structure. So if we look, we're then looking for an A, 3-wave A, 3-wave B, and then a 5-wave C to the downside. And even though the most common target for a wave C is between the two 1.618s over here, with one of the 1.618s found by a trend-based fib extension from the high to the low of A to the high of B, and the other one a normal fib pool from the low of A to the high of B. If you look at the trend-based fib extension pool, this is also a target. It's more rare for a wave C, but the 1.382 and the 1.236 is also a target for an expanding flat wave C. In this scenario, you're then looking for a 5-wave move to the downside ending in this area, which has happened. We also swing failure this low over here, took the liquidity, and are now moving, at least for a little bit, towards the upside. So you want this to be the low, and now you want to see continuation to the upside in an impulsive structure, right? So this then has to be a wave 1, or on the micro, we go there in a second. You want to see a 1, 2, and then eventually continuation where you are gonna break this high over here at about 31.8k. In the bearish scenario, we could also still expect more upside before a move to the downside in a WXY. So this is the high that ends something, and now we are in a 3-wave corrective structure where this is a zigzag structure, an A, B, C, where wave C reached the 1.618 trend-based fib extension, which is taken from the high to the low of A to the high of B, which is a rare target for a wave C, but it is a target nonetheless for then a 3-wave corrective structure in an expanding flat A, B, and then you're looking for a wave C to the upside, or a WXY, same result in this scenario, where the common target for a wave X is between all the fibs. So we have to be more accurate on the micro to get more of a perspective, and also the target boxes will help. We have a resistance area here, the white box between 30.5k and 30.7k that we passed over here violently without any support, but that means it can then act as resistance, and it is in confluence with the 382 as well, and a little bit of an order block that we have on the 15-minute. So that can be quite interesting. And then we have for wave X also here the golden pocket in confluence with this blue support area, which is between 31.1k and 31.3k. So these are definitely the two areas that I keep my eye on. If you go to the micro scenario, then this is the expanding flat scenario where we're still looking for a move to the upside before continuation to the downside. Now, in previous videos, I was constantly talking about I would really like the 30.5k level, or at least this high, to be taken, because my biggest problem with the bullish scenario coming up is this counting as an impulsive structure. But hey, we're gonna get there, right? So in this scenario, we're looking for that WX and then a Y to the downside. Inside wave X, we're then looking for another three-wave structure in an ABC or a WXY, meaning it's either a 3, 3, and then a 5, or it's all three-wave structures to the upside. Most common target area for a wave C is again between the two 1.618s, and the rare target is the 2.618. And if I open my target areas, then here you can see the white box in confluence with the 1.618 most common area for a wave C, and the 2.618 is in confluence with this blue support or resistance area over here. So that is quite interesting indeed, and the areas are the same for this wave Y. So again, this is important, around 35 to 37, and then 31.1 to 31.3 in this scenario for a move to the upside and then a move down. It can also therefore be a fake impulse. So we could count coming up, we don't know what's going to happen, but we could count potentially a 5-wave move to the upside where people are going to be like, hey, this is a new structure, right? It's a wave 1, expecting a 2 before then a 3 to the upside. So they start buying, but instead it is a wave C and then they dump, right? If we go to the bullish scenario, then you want to see that continuation to the upside. That's what you're looking for. So we have a 5-wave move to the downside. 1, 2, 3, 4, 5. 3 has the highest volume as well. That's exactly what you like to see in this impulsive structure. Wave 5 is being made with lower volume. That's also what you want to see. And then you're going to be looking for upside. So the problem here, what I have with this scenario, which I also explained yesterday, and I think maybe even the day before, since the 16th basically, is this structure over here does not look like an impulse to me. If we're looking for a wave 5, you want to see an impulsive structure, 5 waves, 1, 2, 3, 4, 5. But this looks very corrective to me, and that is why I was always constantly saying I'm still looking for 35, even if we do something like this, or, and I drew that yesterday, an expanding flat to the upside in an ABC or then a WXY. This is from my video yesterday, right? Where I was talking about this scenario as well in case price would move towards the downside. And I don't change my thoughts because at the moment, counting this as an impulsive structure for then the end of a wave 5, it just look, I don't know, it's very overlapping, very corrective, and therefore that also means the probabilities for eventually more downside for me are at the moment higher. But also I would still like the 35k highs to be taken, which in both of these scenarios would at the moment be the case as it stands. So we now want to look for an impulse to the upside, 5-wave structure, and I wrote over here we have to look at the volume and at time, because if we look at the volume, we can see that throughout this move to the upside, the highest volume of this move to the upside is basically around the highs over here, right? This area. And that's not really what you want to see in an impulsive structure, because you want to see in an impulsive structure, you want to see a wave 3 on high volume, right? Candles over here, volume increasing, that's nice. Then you want to see a bit of a wave 4, low volume, and then a wave 5, a new high being made, but on lower volume. Could this then still be part of a wave 4? I mean, theoretically, yes, but look how long this structure is in time compared to a short, another short, and another short structure over here. So instead of this being part of a wave 4, I would then think, okay, this could be a 1, 2, and then a wave 3. That fits a lot better in my opinion. But that means that over here, we are ending this first potential impulsive structure on quite high volume. And that's usually not something what you want to see unless you have an extended wave 5. But in this scenario, we're then looking for upside, where the most common target area for a potential wave 2, again, is between the 0.5 and the 0.786, with currently the 382 being tapped over here. but the 0.5 not yet, sitting at 29 or basically 30k. The 382 is a rare target for a wave 2. If we then look finally at the CVD divergences, we had a lot of CVD divergences. Of course, we had the bullish ones over here, which clearly did not play out. Also because the mentioned bearish CVD divergences came into play all the time. And that's so important, right? We have the bullish ones, but then you see bearish ones forming when price is moving to the downside, not what you want to see in the bullish scenario. So price therefore pushed towards the downside, bearish CVD divergences playing out, neutralized, and also the bullish ones are now invalidated. And if we look at the CVD divergences that we have at the moment, then it is very neutral. So we have this, that's not the right structure, I think. We have to refresh, there we go. We have this structure, right? Move up, move down. And currently there are not really any divergences. There's no bullish divergence, higher low, lower low. There's also no bearish divergence, lower high, higher high. So it's very, very neutral on the chart. We have some news today at 2:30 p.m. Central East European time. High impact news, the red flag over here, so make sure you trade safe around these times. And then finally, the probabilities for me, well, if we zoom out to again the medium time frame structure, then my preferred scenario at the moment, or the highest probability scenario on the medium time frame, is the bullish scenario, where I would like to see the 382 being tagged as a minimum. On the low time frame, I prefer the the highest probabilities at the moment go out to the bearish scenario, where we are still going to look for that move towards the downside, and then a WXY over here, or at least continuation to the downside, which mainly has to do with this structure over here, right? Not really good in counting a 5-wave structure in this area over here. For then a W expanding flat and then eventually a move to the downside. And on the bearish time frame, I'm also looking for the micro bearish scenario. So the highest probability for me at the moment is still downside, and that has mainly to do with this structure over here, which does not look like an impulse, but it looks more like a 3-wave structure because of all the overlap over here. An impulse is usually quite clear to count, but this very, very overlapping, very corrective. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.